All right, welcome everyone. Today, we're going to pull back the curtain on the world of Forex trading. We're going to break down some of the most popular strategies out there and, even more importantly, the essential rules you absolutely need to know to survive and thrive in these markets. Okay, let's get right into it.
But before we jump into all the details, I want to plant a question in your head. What's actually more important for a trader? Is it finding that one single perfect strategy that never fails? Or is it having unshakable, ironclad discipline? Just keep that question in the back of your mind as we go through this. So, here's what we're going to cover. First, we'll look at some basic strategies for just reading the market's direction. Then, we'll get a little more advanced and peek behind the curtain at how the big institutions trade. After that, we'll talk about you and finding a style that actually fits your life. And we'll wrap it all up with the golden rules that hold this whole thing together. Think of it like this. The strategies are your tools, but the rules, that's your safety manual. All right, let's kick things off with Section 1, following the market's flow. These are really the first strategies that any trader should get a handle on, simply because they're based on the most fundamental way any market moves. You have probably heard this a million times, right? The trend is your friend. And honestly, there's a reason it's a classic. Trying to swim against the current, trying to fight the market's momentum, it's just one of the fastest ways to get yourself into a world of hurt. The goal is to move with the flow, not against it. So what exactly is trend following? Well, it's really simple at its core. It's a strategy built on the basic idea that prices tend to move in one direction for a while, either up or down. Your job isn't to be a psychic and predict the future, it's just to identify the direction the market is already going and hop on for the ride. And look, this is how you actually do it. It's not rocket science. Step 1. Figure out the trend. Is the price making higher highs and higher lows? Boom, that's an uptrend. Lower highs and lower lows? That's a downtrend. Step 2. You only look for trades that go with that trend. So in an uptrend, you're only looking for reasons to buy. In a downtrend, you're only looking for reasons to sell. And you can use simple tools like moving averages or just drawing trend lines on your chart to make it all crystal clear. Okay, but what happens when the market isn't going up or down? I mean, it can't trend forever, right? A lot of the time it just moves sideways, kind of coiling up like a spring. And that brings us to our next strategy, breakout trading. This whole idea is about getting yourself ready to catch that explosive move that often happens when the price finally breaks free from that sideways box. And this slide just lays it out perfectly. On one side, you've got consolidation. The price is just stuck in a range. Activity is low. It's pretty much a waiting game. But then, on the other side, you get the breakout. The price explodes out of that box, usually with a big spike in activity. That is your signal to act. Okay, let's switch gears and dive into Section 2. We're going to get a little more advanced here and look at what people call smart money concepts. This is a strategy that basically tries to follow the footprints of the big players, the banks, the hedge funds, the so-called smart money. Okay, this stuff comes with a whole new vocabulary, so let's just break it down into plain English. An order block is basically the launch pad. It's that last little opposite candle right before a massive price move. A fair value gap is like a price vacuum left behind when the market moves super fast. Price tends to get drawn back to these areas. A liquidity sweep is a sneaky one. It's a sharp move designed to grab all the stop-loss orders that everyone places in obvious spots, clearing the board before the real move begins. And BOS and choach? They're just signals. A break of structure tells you the trend is still on, while a change of character is like an early warning flare that the trend might be about to reverse. So you might be asking, why bother with all this new jargon? Well, here's the thing. The whole idea is that these concepts can be a lot more powerful than just drawing simple lines on a chart, because they're designed to show you where the big institutions are actually putting their money. And since their money is what really moves the market, trading alongside them can give you a pretty serious edge. All right, so we've covered a couple of different ways to look at the market. But now, let's make this about you. Section 3 is all about finding a trading style that actually meshes with your personality and, just as important, your daily schedule. We'll focus on the two big ones, swing trading and scalping. And this table just nails the key differences. I want you to look at this and be honest with yourself. Do you have a day job and can only peek at the charts a couple of times a day? Then maybe you're a swing trader, looking at bigger picture charts and holding trades for days or weeks. Or do you thrive on the action? Do you want to be glued to your screen, getting in and out of trades in just minutes? Then you might be a scalper. There is no right or wrong answer here, only what's right for you. Okay, everybody, I need you to really lean in for this last section. Seriously, this is the golden rules. And I want to be perfectly clear. Every strategy, every technique we've talked about, it is all secondary to what we're about to cover. This right here, this is the foundation. And I'm not going to sugarcoat this. You can have the best strategy on the planet, but if you ignore what comes next, it is absolutely worthless. This isn't just friendly advice. This is the line between having a professional career and blowing up your account. These rules are non-negotiable. First rule, and maybe the most important rule of all, risk management. You never ever risk more than 1 to 2% of your total account on any single trade, period. This one rule, more than any fancy indicator, is what will keep you in the game long enough to actually get good. It means that no single loss can ever knock you out. All right, rule number 2 is all about making sure the juice is worth the squeeze. It's your risk to reward ratio. This means for every single dollar you are willing to risk, you should be aiming to make at least $2 in profit. A 1 to 2 ratio is the absolute bare minimum you should ever accept. The math is simple. This edge means you can be wrong more often than you're right and still not lose money. And now for the hardest part, the real boss battle. It's winning the fight that happens between your own ears. Your two greatest enemies will always be greed and fear. Greed tells you to risk too much, to chase a trade you missed. Fear tells you to snatch a small profit too early or to freeze up when a perfect setup appears. And they both lead to the biggest sin of all, revenge trading after you take a loss. Mastering your own mind is the real work. Okay, so let's wrap these rules up into a solid foundation. You always use a stop loss to define your risk before you enter. You have to accept that taking losses is just a cost of doing business. You need a written trading plan with clear rules so you're not making decisions based on how you feel, and you absolutely must keep a journal to review what you did right and what you did wrong. That's how you actually get better. So let's bring it all home. Remember that question I asked at the very beginning? What's more important, a perfect strategy or iron discipline? Well, by now, I think you know the answer. The strategies, trend following, breakouts, all that smart money stuff, they're just tools. But the rules, risk management, psychology, planning, that is the concrete foundation your entire trading career has to be built on. Look, the strategies, you can learn those. The rules, you can write them down on a piece of paper. But actually living by them day in and day out when real money is on the line, that's the whole game. So the final question isn't about the market, it's about you. You've seen the playbook. The question is, do you have the discipline to follow it?